Good morning, everyone. So today we are going to start off a new subject altogether, bar. So all of you had joined the orientation session which I had for bar, or is anyone there who had not done the orientation session which we had like a week back almost? You can put in the chat box. Okay, so one person is 2%. Okay, so then I'll briefly tell you what exactly is bar all about. So bar is the optional subject. Obviously, you know about it. The bar is a lengthy subject. Let me share my screen and show it to you that what all we will be covering in bar. Okay. Is my screen visible to you all? Is my screen visible? So bar is basically a combination of earlier some topics of bar and many topics of BEC. The first three chapters are from BEC, okay, as it is. And then the last two chapters are from PAR, okay. So BEC is not advanced topics. It is the same as at the level at which it was there in BEC, exactly. But the PAR topics are the advanced topics. Means it was there in PAR, but these are the advanced topics. Okay, so earlier in the earlier syllabus also people were doing this. So it's not something rocket science or very much high funda that has come into this subject. The only thing is that it will be a little bit lengthy. Okay. First, we are going to start off with the risk management, enterprise risk management, financial risk management, and then market influences on business, etc., etc. So I have a previous BEC which summary notes. So let me just open that up and see. We can use that also because it's exactly as BEC. So, and that summary notes were appreciated by all the students because from the book sometimes it becomes difficult, but if you do it from the summary notes, then it becomes easier for you to kind of what do I say? Easier for you to revise also later on. Okay. Yeah, let me share that Excel also, and let me share add. Okay, you can see the Excel. Can you see the Excel? Okay, 1 minute, let me check. Now, okay, thanks for confirming. Let me hide this. This is not relevant. So in BEC earlier it was Koso IC framework also and ERM also, but in your syllabus it's only ERM. So that's what we are going to look at. First, a little bit of introduction, right? So Koso issued initially they issued a IC framework, internal control framework, and then they issued ERM, enterprise risk management. Now the IC framework or the internal control framework already had something about risk, but then they thought that this risk management process needs individual attention. Okay, that's why they made a totally separated framework so that focus should be there. Now why all this came into picture was because of all the frauds that was happening. Okay, WorldCom, Enron, etc., all those frauds, Arthur Anderson, all those frauds led to the development of the framework. And in 2017, it was revamped. So not too long ago, right? 7 years back. Okay. So as the name suggests, right, it is about risk management, right? Enterprise means the organization, and enterprise risk management means we want to manage the risk. There are various topics within this that we are going to understand. So let me go to the Excel summary notes. First, we will go through this, and then we will go through the class notes. Then it will be easier for you to understand. Okay. So let me go here. Value. So what is value? Value has four concepts. CPAR. Okay. Okay. These notes are just my notes which I had created. Okay. So it's not something very much. You will find that it is structured too much, but it is similar to what we have in the book. However, I created it like that so that I can read it and understand it properly. Okay. So first concept is of value. What is value? Value means, generally what do you mean by value? Can anyone tell me what is the meaning of value? Value means profit. Okay. What else? Anything else? Guys, try to be a little bit interactive. This should not be a graveyard class. Okay. Otherwise, I will not be able to know whether you are sleeping or whether you are focusing on the class. Wealth of company. Okay, good. Final net benefit means the profit only, right? So basically, we are focused when we talk about value, we are considering shareholders wealth, right, or shareholders net worth. That's what we are talking about here, because shareholders are the ultimate owners of the company, right? A company exists to create shareholders value or shareholders wealth or shareholders net worth. So, and of course, that will be created only when we earn profits, right? If we earn losses, if we are incurring losses, then we are not going to earn profits. So we are not going to increase the shareholders' wealth. So there are four concepts. First is creation, preservation, erosion, and realization. Now, what all are these? So we'll go to one by one. Value is created when value is created simply when we are earning profits, right? If we are earning losses, then value is eroded. Okay, very simple, right? If we are earning profits, value is created. If we are incurring losses, then value is eroded. Value is preserved when we are just maintaining the level at which we are there right now, or there which we were last year. We are maintaining at that level only. We are not growing at all. Then it is value preservation is happening. And value realization will happen when the shareholders are able to realize some value. When that can happen? Shareholders can realize value when? How do shareholders get the value? They will get the value by getting either capital gains, right? Capital appreciation of their stock value. Another form is when they get dividends. Okay. So when they will get dividends, then they get the value, or there is a capital appreciation, then they will get the value. And value realization will happen when they sell the stocks, right? And they will get some capital gains. Okay. So that is the concept of value creation, preservation, erosion, realization. Now I'll give you an example and you tell me out of which four it will be falling. Okay. The company launched a new product. The company launched a new product and it flopped. No one bought it and the company was not able to reap any benefit out of it. So out of these four, you can write CPER, write short forms, because I know that people don't like full forms while writing answers. So CPER, what will be the scenario here? Correct. It will be value erosion, because whatever new product we launched, it failed. Another scenario, similar way, a new product was launched, but it was a huge success. A new product was launched and it was a huge success. So which one it will be? CPER. It will be value creation. Again, please understand, value realization is when the shareholders are selling something, right? They are realizing means actually they are getting the gain. Creation is notional gain, right? When value creation occurs, when the share prices go up, is it an actual gain or notional gain? A or N? If you have bought shares or mutual funds and it is going up in value, are you having any actual gain in your hands, or it is a notional gain? A or N? Correct. So similar way, when we have launched a new product, we are not actually, the shareholders are not actually getting any profits in their hands, right? So that is a value creation only, not value realization. I hope it is clear for whoever said value realization also. Three terminologies you might have read about: mission, vision, and core values. Okay. So mission and vision. Have you heard these terms before? Have you heard these terms before? Mission and vision, very common terms, right? I'm not asking whether you know about the meaning of not, but I'm just asking whether you have heard these terms or not. Mission and vision, very common terms. No, only one person? Okay. Good. So now we will understand that what it actually means. Mission is why the organization exists, right? It is a high level, top level objective. Okay. And vision is what the organization wants to achieve. Okay. It is the goals. So what do you think will be means this mission and vision are written statements for every company. Which one of those two do you think will be a smaller statement? Mission or vision? Mission is why the organization exists. Vision is what they want to achieve. Which one will be the lengthier statement out of these two? Mission or vision? M or V? Just guess. There is no right or wrong. Okay. I'm anyhow going to explain. Which one is lengthier? Which one would be lengthier? M or V? Okay. So let me show you. All right. Let us do a real live example. So let's say Amazon's mission statement is to be Earth's most customer centric company. That's it. That's it. Why the company exists? To be the Earth's most customer centric company. Okay. Vision statement. Amazon's vision is no. This doesn't seem correct because it's not only Earth's best employer and Earth's safest place to work. It's a much longer statement. Let me see where I can get. For principle, leadership principles. On Google, you cannot get everything. You can get from Copilot. See, I'm using, what am I using? See, Chat GPT. This is Copilot, which is basically Chat GPT collaborated AI based model of Microsoft, right? So you saw how easily I got it. Okay, so I would suggest everyone to use this, right? So Amazon's mission is Earth's most customer centric company, but vision is to build a place where people can come and find and discover anything they might want to buy online, and additionally it wants to become Earth's best employer, the safest place to work, etc., etc. So which one is lengthier, M or V? You got it, guys, right? So it is the vision statement that will be lengthier because mission statement is simply why the organization exists. It's a very high level, right? At the extreme top level, that this is the single focus of the company to be the Earth's most customer centric company. That's it, right? And vision statement will elaborate it a little bit further. Okay. And I gave you a live example of Copilot also. Okay. Now next is core values. Core values is related to our ethics and culture, how ethical the organization is, how what is the sort of culture that they are following, etc. That is also very important because it differs from organization to organization, and it comes from the tone at the top. This is one terminology that I always use, that it depends on the management. If the management is ethical, then only the subordinates, the middle level management, I mean the senior management is ethical, then only the senior middle level management, the subordinates, the very junior level employees will be ethical. Okay, because they will try to follow their senior management. Okay. So what is ERM now? ERM means culture, capabilities, and practices. Culture we just discussed, right? Core values. Capabilities, what the organization is capable of, right? What is its core competency? How it is faring against the competition, etc. And practices are the policies and procedures that the organization may be having. Yes. So next point is integration with strategy setting. This is very important. See, suppose there is a separate policy for ERM, okay, and separately mission and vision is also there. Do you think employees will be serious about ERM if it is only a separate policy and not a part of the mission or vision? Will the employees be serious about it? If it is only a standalone policy that is being kept without integration with mission and vision, what do you think? So that's a hard no, right? You guys are right, because it's very simple, right? In our case also, whoever is working, they might be knowing that unless we are forced to do something, we will not do that, right? So unless we integrate the ERM policies and practices into our core strategy, no one is going to look at it. All right. So this is very important that the management actually, if they want everyone to be serious about ERM, they want to add it to the core strategy or the mission vision, right? See, mission and vision correlate with strategy and objectives, right? Core values correlate with culture. This is what we discussed. So risk and rewards, there is a correlation, right? So higher the risk, what will be the return? Higher or lower? Yeah. So it was a trick question. Okay. As Virbal has said, it depends. Think about it, right? I said higher the risk. Risk is what? What is the risk? If we are taking risk, what is that risk? If, for example, say, for example, it is said that if you are putting your money in stocks, it is risky, right? Everyone knows that. Or if you are putting your money in bitcoins, definitely it's risky, right? What does it mean? What does the risk mean? If it is risky, are we always going to get higher returns? If Bitcoin is risky or share market is risky, are we always going to get higher returns? Yes or no, guys? Vishwadeep says yes. So it's a big no, right? That is the risk, right? What is the risk? The risk is that there is a chance that we will get a higher return, but there is also a chance that we may get a lower return, or there is also a chance that we may get negative returns, right? So higher the risk, higher the return is not a correct statement. Higher the risk, please listen carefully. The correct statement is higher the risk, higher the expected return. What we expect from that risky asset class, high return, high risk. Oh my God, that's totally wrong, right? High return, high risk. I don't know what does that mean. High risk, high return is what many people say, but that is also wrong, right? Higher the risk, higher the expected return. Okay, not higher the risk, higher the return. And I don't know, higher return, higher risk. This is first time I'm not probability. Again, Parth, again, that's wrong. Higher risk equals to higher probability of return is incorrect. If the probability would have been higher, there would have been there would have been lower risk. Think about it, right? From a logical perspective. If there is a high probability of return, then the risk would have been lower, right? So higher the risk, higher the expected return. You expect the return to be high. It's not a probability that it will be higher. Okay. So see here, what is here? It is given. Risk is here, right? Don't go on my drawing, please. I'm not a drawing artist. What is going to be higher? Expected return, not actual returns. Okay. So risk and expected returns are directly related. Okay. All right. So now there are certain concepts that you need to know. First is what is risk appetite. Okay. Risk appetite. Do you know what is the meaning of appetite? Whoops. Do you know the meaning of appetite? Appetite in a general sense, I'm asking. What is the meaning of appetite? When you hear the word appetite, what do you think about it? Appetite means I'm not talking about risk appetite. I'm talking about appetite only. Have you heard about the term appetite before? No. Exactly. Right, Manju. So appetite in general sense means related to our capacity to eat food, right? How much food we can eat, right? So risk appetite simply means how much risk we can take, right? Obviously, we cannot eat risk. It's not a food item. So how much risk we can take, right? And definitely, it's a mix. Okay, it's a mix of both. How much money we are having, spare money means, say for example, I am having let's think big, right? I'm having 100 crores. Okay. So why to think small? So let's say I'm having 100 crores. Out of that 100 crores, I'm investing, let's say 10 lakh rupees in Bitcoin. So for a 10 lakh rupees investment in a riskier asset, my risk appetite will be higher only because I have got a lot of money to back it up. Even if I lose 10 lakhs, it will not be a big thing because I have 100 crores. Now, in case a person has say 1 crore, then if they have to invest 10 lakhs in Bitcoins, they need to have a higher risk appetite or a lower risk appetite. If a person has 1 crores and 1 crore, if and they have to invest 10 lakh rupees, they are ready to invest 10 lakh rupees in that means 10% of its entire portfolio, they are ready to invest in Bitcoins. So they will have a higher risk appetite or low risk, or let me change the numbers a bit because maybe it will be confusing. Let's say one person has 1 crore and they are ready to invest 50 lakh rupees in Bitcoin, 50% of their entire portfolio. Then what do you think? They have a higher risk appetite or lower risk appetite? H or L? Correct. So they have a higher risk appetite, right? So it depends on how much money you are having, means how much percentage of portfolio. In a 100 crore portfolio, 50 lakhs is nothing. So I am having a low risk appetite only, although the amount may sound in absolute terms high only. So it depends on how much money we are having. Secondly, it also depends on our mentality, right? Even if I am having 100 crores, I am not ready to invest even a $1 into into risky assets, then I have a low risk appetite, right? So basically, it's meant that how much risk we can take. So at a organizational level, also it is there because companies regularly take risks, right? Launching new products, shelving off old products, right? Um, Foraying into new geographical areas, correct? Foreign countries, etc. Okay, so that will all those decisions will have to be taken as per risk appetite. See what I was saying, right? As risk assumes goes up, expected return goes up. So the main word you need to remember is expected return. Okay, see, mission vision is given, mission why we exist, vision is the goals, right? And values are the core values, culture, ethics, etc. Everything is interlinked, right? Now we come to the main topic of the chapter which you will have to focus on. Questions will be asked on this definitely, that what are the components of ERM. Okay, so the components of ERM is called GoPro. Okay, governance and culture, strategy and objective setting, performance, review and revision, ongoing information communication and reporting. Seems simple enough, right? But within these components we have principles also inside that. So it's not only these 5 components, we have a lot of principles which are going to come like this. This table is there, no, total. Do we have to remember all of this? Unfortunately, yes, you will have to memorize this. So a few of the things you will have to memorize. So this name of the components you will have to memorize, and within that components, what are all the principles that you have to memorize, so that how the questions can come is acha, we are going to discuss all of them, don't worry. It's not only memorizing. I'm going to explain all of that. Okay, so what you may be asked, let's say for example they say that exercising board oversight is in which component, so you will have to choose governance and culture. Okay, so that's how they may ask questions. So I had created a table here. Okay, let me check. So this is not needed because this is basically related to the Koso IC framework. I'm going to delete this. This is there, right? So I will tell you what I had done during my examination time. I had shared this tip with the previous batches also of BEC, and they had found it useful. I leave it up to you if you want to apply that or not. What I had done is I had taken a printout of this. Okay, and I had pasted it in front of where I studied, so that in every week, twice or thrice, I would just going here, there, I would just put cursory glance. And what that did was spaced repetition, right? There is a concept of spaced repetition that is very important for every student, that you read something, then after certain gaps, you revise that, right? Revise that, or at least read it again. What happens over a period of time? It transfers from your short-term memory to long-term memory, because your brain thinks that since you are repeating it again and again and again on a spaced basis, not that you're repeating it on a daily basis, right? Spacing is also necessary. Your brain will think that this is important for you, okay, and it will move it from the short term memory to the long term memory, and that is our goal. Okay, anything you want to memorize, your goal is to move from short term memory to long term memory. All these concepts I am talking about from a very great MOOC, open online course, which I had done on Coursera years back. It is still one of the best courses on Coursera. It's called Learning How to Learn, okay, by Barbara Oakley. So, but I am telling you the best trick or best strategy technique from that course, which is spaced repetition. You read something and then you reread it after giving some space. So what I had done, I would suggest you guys also to do the same. Take a printout. Some of you may be thinking, oh, that's too much. But see, I didn't care, right? Means who is going to check? This is my room. I'm pasting it here. I am studying for CPA, and the future benefits also I am going to reap, right? So that's why I would also suggest you guys to print it, so that here there going, you will be able to just look at it once or twice. Okay. So let's see what all things are there. Governance and culture, objective and strategy setting, performance, risk related performance, and review and revision, and lastly, ongoing information communication. So what all things are there, we'll read on. So first is the Dove's mnemonic, desired culture. Okay. So desired culture, what is meant by that? Culture means the tone at the top, right? As I was talking about earlier, core values, etc. Right? Whatever the senior management is portraying, let me give you a real example. In one of the banks, right? Well, not one of the banks, multiple banks. If you go and search on the internet, this type of what I'm going to explain, the type of fraud or non-compliances you will find in many banks, like Wells Fargo was there, very famous case. Then ICICI Bank was there. Bank of Baroda recently I had seen related to their app, etc. was there. So what was happening basically is that a fraud came into picture, whereby it was found out that in the name of fictitious customers, accounts were being opened by the branch level employees, and the branch level employees were named as the culprits. Okay. So what the branch level employees who were being shown as the culprits in all this said that this is not our fault only. Unrealistic targets were put on us, so that it was a pressure cooker environment, and we were doing all this in front of the management, in front of the branch managers also, and even the senior management knew about it, but they were turning a blind eye. They were not telling us to stop. So if they are not telling us stop, and they are just putting more and more targets over us, then what do you think about the culture, right? What do you think about tone at the top? Are they supporting it or not? Even if they have not given it in a written email, are they supporting it or not? What do you think? Correct. So they are supporting it, definitely. And yes, so they are supporting it. So that is one of the examples of tone at the top. If at the top the culture is of ethics, then the employees will also be ethical. Which example I can give you? Let's say the Tata Group, right? They believe in ethics, so that's what they have portrayed, and that's how the employees also believe in their ethics, right? Infosys also, for that matter, or there are several companies, right, like that. Next is board oversight, right? Board oversight and independence. What it means? So there is a senior management or top management that runs the show in any company. Okay. And then there is board of directors. So what the board of directors does is, first of all, they should be independent of the management. Why they are there? To see that the management is not doing something wrong. Okay. So board of directors will be having both independent directors and otherwise also. Some people from part of management also will be there, but some people from outside of that company will also be there, part of the board. So they will have the oversight responsibility over the entire management and over the entire company. They are not going to manage day-to-day activities. That is the part of management. Commitment to core values, obviously similar to the desired culture. Both of them will go under governance and culture. Capable individuals or employees. So this is also important. What it basically means that we need to have a culture where the achievers are rewarded and the slackers are punished. What it means, I'll explain. Let's say in a company there are two employees. Okay, one employee works very hard. Um, she's working on the projects very well and closes on time, everything, gets good stakeholder feedback, etc. Another employee is there and she is average employee, and she doesn't care too much of taking any new projects. Whatever is assigned to her, she will try to complete it on time. Maybe sometimes she will not do it on time, also give some reasons behind it, and try to manage her work. At the end of the year, if both of them are getting average rating, right, which happens, you might be thinking that how that can happen, but in many big MNCs like that only the structure is that there is something called a bell curve. Okay, the bell curve is a normalized curve. It is not part of your syllabus, but it is a part of statistics. So that normalized curve, okay, let me show you only how does that look, then you will be able to understand. Yeah, you're seeing this. Are you seeing the curve? So looks like a mountain. What happens here, it's a very simplistic bell curve. Okay. What happens here is most of the people will fall in the mountain, right? The top of the mountain, which is the average. So if you see here, it is the average part and outliers will be very less. So those two employees, some will fall somewhere here. Okay. So that is the problem. Okay. Now we don't want that sort of a scenario where good employees are not being rewarded and the slackers are not being punished, right? Everyone is accountable for their own work, whether they are doing good or they are doing bad. Okay. Operating structure. So what operating structure means, that how the organization is structured, right? How the employees are structured, superior, subordinates, how the product lines are there, how it is regionally, geographically uh, structured. Okay. Objectives and strategy settings. What is meant by this? So objective and strategy is about mission and vision. Objective is about the mission and strategy is about the vision. Okay. Mission and vision we already discussed. Mission is the shorter statement whereby why we exist, and vision is how or what we are going to achieve. Then we have to analyze the business context. What is meant by this? Context or business context means the environment in which the business operates. Okay. Acha, you might be thinking that bar is all theory. Is it? Bar is not all theory. Okay, this chapter is theoretical. The next chapter itself will, the next module itself will not be theoretical. Okay, part theory and part numerical. Most of bar is numbers based only. Okay, so don't worry, this is just the initial part. It is little bit boring, I know, but then we will get to a little bit more interesting part maybe tomorrow. Okay. So business context, what is meant by context? The environment in which the business operates. It can be the economy itself, the country where it operates, the cycles that they are going through. It can be a up cycle, it can be a down cycle. We will discuss about it in economics more, that what are all the cycles which we have to go through. Then the risk appetite, We already discussed it is the risk tolerance, right? Performance. So what is performance? We have several aspects in performance. Portfolio view is there. Portfolio view or parent view means that at the overall level, if it is a group company, at the overall level, how the things are looking, right? How much risk we are taking. Let's say, for example, in one company we have high risk, in another company we have lower risk. They may be compensating each other at a group level. So we should be okay. Then assessing the risk severity. Risk severity means the impact of the risk. First of all, we have to identify the risk, right? It is called risk inventory. This risk inventory means what? What is the meaning of inventory? Only one answer, no one else knows. Generally, when I talk about inventory, what is coming to your mind? Correct. Generally, when we talk about inventory, stock comes to our mind, right? Because in US GAAP or in US based, we will talk about inventory word only, not stock, right? But here the word inventory doesn't mean stock. Here the word inventory denotes the list, the total number of items, right? So that is what is meant by inventory. So if I'm talking about risk inventory means the total risks that we are having, all the types of risk, right? So obviously we'll have to list them down, right? So that is what is meant by risk inventory. That is in this identifying the risk. Okay. Then after identifying what we are going to do, we will check what are the impact or the severity of all the risks, right? Because if something is a low impact risk, we may ignore it also. Something is high impact, then we will have to do something about it. Based on the risk impact, based on the risk frequency, we are going to prioritize the risk, because obviously we don't have so much resources that we will look at all the risks, how to mitigate all risks together, right? So we are going to prioritize the risk, rank 1 2 3, and we are going to deal with them accordingly. We'll discuss about it a little bit later, that how we do it. Risk responses using parts. So this is very, very important. We are going to discuss it in details, that how we give risk responses using parts. So after doing everything, prioritizing, assessing the risk, etc., we are going to respond to the risk so that we can mitigate it. Okay. Then comes review and revision. Within review and revision, there are few things. Substantial changes are there. If any substantial changes are there, we are going to uh, basically we will have to look at it on a holistic way, that what will be the impact of those substantial changes. Let's say, for example, we are going into an M&A, mergers or acquisition, or we might have directors changed, we might have the CEO, CFO changed, etc. Improvements in ERM. So any improvement is there in ERM, that also we have to look at it. And then we have to review our risk and the performance related, how did we manage the risk, whether we were able to mitigate it or not, etc. Information and communication, it's all about how we are communicating the risk related information, the technological advancements that we are having, and the performance report also we are going to publish. Okay. There are three types of risk nature. The nature of risk is of three types. We will discuss about it a little bit more in next chapter, FRM, next module, sorry, financial risk management. That there are three types of people or three types of company. One is risk averse, one is risk neutral, and the third one is risk aggressive. What are those? We'll discuss on the next chapter. Board oversight. Okay, all these things we have discussed. Operating structure, whether it's centralized or decentralized. Objectives need to be smart, specific, measurable, attainable, realistic, and timely. Business context is economics, risk appetite, risk tolerance, or risk capacity. That's fine. Yeah, so these are some important terms. Okay. That there are a few things. Okay. First is, what is the risk that we cannot do anything about? What can be that sort of risk? For example, we are in a ice cream industry, right? we are selling ice creams. What I see is that while selling ice creams, my sales is going down in winter, my sales is going up in summer. Can I do something about it? My sales is going down in winter and my sales is going up in summer. Can I do anything about it as an ice cream company? Yes or no, guys? For yes or no question also you are not answering. So we can't do anything about it, right? Means to some extent Virabal is saying, so that is very minimal, right? On an overall basis, if you see, on an impact basis, we can't do anything about it virtually. So that is the inherent risk. So inherent risk means that what is inherent in the business, in the industry itself, that is the risk that everyone will have to take. So we can't do anything about it. So we don't have, we have to just know it that this is the risk that we have to operate with, but we can't do much about it. Let's say another risk, another type. If we are selling, if we are a seller of, if we are a seller of medicines, okay, if we are seller of medicines and we are in a country which is having a old population, right? So there our inherent risk will be lower, right? Let's say a country like Japan, where the population is old age, right? Aging population is there. There, if I have a medicine shop, then my inherent risk will be lower, or a medicine factory, then our inherent risk will be lower because the demand will keep on increasing. On the opposite side, if we are having something youth oriented product in Japan, then it will have an inherent risk of lower sales. Residual risk. So residual risk means that we have a risk, right? We have taken the risk inventory, correct? So we know that we have this risk. Now out of that inherent risk, we can't do anything. But remaining whatever risk is there, we have to mitigate, right? We have to try to reduce it to the extent possible. So after trying to reduce it to the extent possible, after that also some risk will be there, because there is something called cost benefit analysis also. Let's say the cost of reducing the risk to zero is so high that it doesn't make sense. So what we are going to do, maybe we will not try to reduce all the risk, but we'll try to reduce the maximum risk, and whatever is remaining is called residual risk. So residual risk means remainder risk. Okay, some risk will still remain even after putting all our efforts. So that is called residual risk. There are two types of residual risk. One is target residual risk. Target means what we are targeting, what is the budget or standard, and then actual residual risk. In reality, what came out as the actual residual risk. Okay. Then we have risk responses using parts. Okay. So this is very important. Questions do get asked on this regarding regarding how the risk responses are done. So let's take a break, okay, and then come back. Let's say we'll come back at around 11:40, okay, and then continue with risk responses. Yeah, this Excel I will share with the team. They will upload it in the LMS. Okay, from there you can download. Welcome. Let's connect back at 11:40. So risk responses, okay. I'm audible, right, to everyone? Am I audible? Okay, thanks. So we'll go through all of them one by one. See, risk responses will come. First of all, we have taken the risk inventory, identified all the risks, whatever we can identify. Then we have to look at the frequency and the impact of the risks. Based on that, we can frame risk responses. How we are going to do that, we are going to check out that, right? So this heat map is not very clearly given in the book. That's why I had prepared here, so that it is easier for me also and then the students also. So first is we'll pursue risk. What is meant by pursuing risk? Pursuing risk in the hope of higher returns, right? So we have expected higher risk, so we'll take on leverage, we'll take on debt, we will take some more risk and pursue the risk. Okay, so that's fine. That is the normal nature of business. Now these four are more important because these four will come into this four metrics also. What this all means. First is avoidance of the risk. What is meant by risk avoidance? Risk avoidance basically means that we are going to leave that risk. We are not going to take it. Okay, totally we are going to go from that risk to zero risk in that area. Okay, next is I will take some examples, don't worry. Next is we'll reduce the risk. So risk reduction, this is the most common one, right? That we are going to reduce the risk by taking some steps or the other, we'll try to mitigate it. Okay, then there is transfer or sharing the risk, which means that we are going to take, let's say, an insurance. Okay, if we take an insurance, then it is the classic case of transferring or sharing the risk. A third party is involved in this. Okay, self insurance or accepting the risk means that we are going to just accept the risk. It is like inherent risk, right, which we were talking about earlier. So that is, we are going to accept it, we are not going to do anything. Now we have this matrix, right? Frequency or likelihood or probability versus severity. Frequency or likelihood or probability, if it is high and the severity or the impact is also high. Let's say, for example, we are in an area, we are having our business in an area where flooding is very common. Flooding is very common. So the frequency is high or low. You can write H or L. The frequency of the flood is high or low. Flooding is very common. Correct. So the frequency is high. Now frequency is high. That means either we are going to avoid or we are going to reduce based on the impact. Now what do you think? Impact of a flood will be high or low? H or L? Impact of a flood will be high or low? The damage by the flood will be high or low? Low due to sharing. When did I say that we are sharing, Manju? When did I say that we are sharing the risk? So the impact will be high or low if the flooding is occurring commonly. Okay, so the impact will be high. So if there is very high, very high or common number of times in the year that the flooding is occurring, and obviously the impact is high, then we will try to avoid it. We will try to shift our base from that area to another area. Okay. Now let's take another example. The frequency of risk is high. Let's say in our go down, we see that there are regular thefts that are occurring. Small thefts. We are dealer of some, let's say we are dealer of toys. Okay, and we are seeing from our go down every now and then some theft is occurring. So the frequency is high or low? Frequency is high. See guys, until you will not respond, I'm not going to move forward. Please understand that. Okay, so that is how it is going to happen. It's not a one-sided lecture that I'm just talking to the computer. Okay, so the frequency will be high. Okay, because I'm saying that regular thefts are occurring. Okay, but it is toys, obviously they cannot take too much, so it's like small thefts are occurring. So impact is high or low? Impact is low, right? For each individual theft the impact is low, correct? Because small items they are looting us. So in that case we will try to reduce. How we can reduce? We can put extra security, we can put CCTV cameras, etc. Right? Now let's go to next quadrant. So let's say normally the first example was of flood which is commonly occurring. But in a normal scenario, normal place, let's say a city like Hyderabad or Bangalore, what is the probability of a flood? Frequency of a flood, high or low? correct? So normally the frequency is low. So any natural disaster, be it flood or be it fire, anything, right? Any accident occurring, it's a low frequency, and the impact will be high or low. If it happens, the impact will be high or low. The impact will be high, right? Whenever it happens, it will destroy a lot of things, correct? So in that case, we are going to transfer. We are going to take a insurance, maybe a general insurance, fire insurance, flood insurance, etc. Or I will give an example, the term insurance, right? What is the frequency of the risk in term insurance? The term insurance that we take on our individual self, what is the frequency of the risk occurring? Correct, it's the lowest possible, right? एक ही बार तो मरेंगे ना, correct? You will not die multiple times, correct? So that is the example that you can remember this from, that this transfer or sharing of insurance, in that the frequency is low and the severity is high. Now in case the frequency is also low and the impact is also low, let's say about the theft example, right? Theft is not occurring regularly. Maybe we saw then that in the past 10 years, once a theft had occurred. So what are we going to do about it? And that theft also, the amount was very small. What are we going to do about it? Correct. So we are going to do nothing basically, right? We will accept it. That means we'll do nothing. Correct? Okay. So that is this matrix. All right. There are certain other examples you can see from the Excel later on. Substantial changes. So corporate restructuring, new accounting policies have occurred, etc. Right? Everything else I think we have discussed. Now we'll go through the book, right? Just so as to show you that we have covered everything. So see, desired culture, etc., etc. This is just from that table, right? Either you can take a printout of this 2 pages, or you can take a printout of that Excel. So in details, it is mentioned here. All the things we have discussed already. Board oversight. So active and accountable board oversight is having frequent conversations with the management, okay, regarding the ERM. Commitment to core values, that is the cultural part. Capable in individuals, right, employees. So I had explained this about the accountability part and how we need to reward the employees who are what do I say, deserving, right? Operating structure, centralized or decentralized. So two types of structures are there in any organization. It can be either the headquarters is controlling everything, each and everything, or it can be a decentralized basis, that each and every location is having a power of its own, okay, for taking decisions. Basically, what decisions they need to take, if they are able to take at a localized office, at a branch office, then it is called decentralized structure. But if they are not able to take, and for every decision they have to ask the headquarters, then it is a centralized structure. Nothing is right or wrong, it can be both ways, okay. It depends on from the organization to organization what they want to follow. Strategies and objectives. So objectives, strategies are vision, objectives were the mission, right? Degree of operating leverage, degree of financial leverage. Now what is this? Just so that you know, if we have more fixed cost in our P&L, more fixed cost. Fixed cost can be depreciation, fixed cost can be rent, right, etc. If we have more fixed cost in our P&L, is our risk more or is our risk less? What do you think? If we have more fixed cost in our P&L, is our risk higher or risk lower as a company? So our risk is higher, right? Because we, even if we are having profits or we are not having profits, we will have to pay that fixed cost, right? If we are having losses also, we'll have to pay the fixed cost anyway. So that is a generally a more risk. Then again, similar way, if we have more debt in our capital structure instead of equity, is our risk higher or is our risk lower? What do you think? Correct, because interest we will have to pay whether we have profits or not. So those two are represented by degree of operating leverage, DOL as degree of operating leverage, and degree of financial leverage. Degree of operating leverage means related to fixed cost, degree of financial leverage means related to interest, right? Debt component. Both if you combine, multiply, then we get the degree of total leverage, right? There is a formula also. If you have the degree of total leverage and you multiply by the change in sales, then you will get the change in net income, and of course on a percentage basis. All right. So very simple formula. You can just have a look at it. There will be certain formulas that you will have to memorize. So we can't do anything about it. That's like maths, right? So yeah, strategies we discussed. So let's go through an illustration that lender is setting their interest rate. If they are setting, lender means who's giving the loan, like a bank, right? So they are giving the loan, so they will have to set the interest rate, right? Now they don't know that in future what is going to happen. So they will look at it right now, estimating in future that what all can be the risks that we will have to take. Based on that, they can increase or decrease the loan depending on which buyer is coming. For example, in our current scenario also in India, there is a CIBIL score that the banks will check. If basis that, they will be able to recognize that whether this guy will pay back our money or not. If there is higher risk, they will increase the interest rate. Okay, that is why you will see that the personal loan interest rates are much higher than the home loan interest rates, because home loans are generally secured, right? Business objectives are our mission, right? Budget versus actuals, etc. Business context is our environment. It can be the economy itself, it can be the competition, right? Technological changes. Risk appetite we discussed, that what can be our capacity to take the risk, how much we can tolerate it, right? There can be certain terms as ceilings or floors. So what is meant by this is that how much is the maximum risk we can take, how much is the minimum risk we are going to take. That is called the floor, maximum is called the ceiling, right? Parts, right? Just now we discussed parts, risk responses. Parent level portfolio view, I told. Group level, right? Impact, severity, etc. We have discussed all of this, likelihood and all. Just now we discussed this inherent risk, target risk, actual residual risk, depending on the management actions, right? Prioritize the risk based on the impact and frequency. Identifying risk is the first and foremost. We'll take a risk inventory. And lastly, risk responses, right? The parts only they are elaborating a lot. We also discussed this one, right? Same thing, correct? Review and revision. So of course, see, after doing everything, we cannot once we have done the exercise of risk management, we cannot just sit later on. We will have to review it on a regular basis to check out that there are no new risks that have come up, or the level of risk that we had assessed earlier has changed, right? So those things we'll have to kind of look into it. Okay. So that's where review and revision comes. Also, we'll have to review and revise. We'll have to review that whatever we had assumed in the beginning, that this risk will be at this level, we are taking these steps to mitigate it, whether that has actually happened or not. Okay. Substantial changes. We discussed about this also, right? That any mergers and acquisitions is happening, any compliances, regulations have changed, or internally any CEO, CFO, etc. has resigned, or so on and so forth, right? We have to check about improvements in ERM. It can be technological, it can be otherwise also. So how does information help? Because that is also one of the principles. So governance, other components, how does the information component help? So governance and culture related practices, organization may need information. Everywhere in each of the topics, information is needed, right? In today's world, data is the new oil. That is what is said, right? So we need to understand that information is needed for each and everything. Otherwise, we'll not be able to take decisions, right? We'll not be able to take our next steps itself. Data management, right? That's what we were discussing. Communicating the risk information. How do we communicate? There is something called MDNA. Okay, when you are filing, when you are filing your returns, right, annual reports or quarterly reports with the SEC, then you need to show something called MDNA, and in that the risks can be communicated to the shareholders. Okay, or it can be put up on the website also, so that everyone can look at it on a publicly basis. Now, what are the benefits of this ERM framework, right? So, see, if you don't have the ERM framework in today's world, it's called a volatile world, right? Very volatile, very dynamic, and there are a lot of bad actors there to kind of take advantage of you, right? In such a case, in such a scenario, we need to be proactive and we need to have our risk management procedures in place, so that in this ever changing economic world, we are at least to some extent, or at least or to a large extent, we are ready to combat any risk, right? If you don't have a exclusive or a separate ERM practice, then how do you think we are going to manage all the risks that are happening? And in a company, soon the company will start growing, right? Once the company starts growing, then it becomes even more difficult to have a risk management process in place. Otherwise, what happens if initially itself we have risk management process in place? As the company grows, we can make the policy also bigger and better, right? But if we have to do it from scratch, it is very, very difficult. So while realization of value also, let's understand this from this perspective, right? We want to create and realize the value for shareholders. Okay. So let's say we want to fill up a bucket with water. All right. You are putting a lot of water in that bucket, but you are seeing that the bucket is not filling up. Can anyone tell me why that is happening? What can be the possible reason that even if I'm putting lots of water in that bucket, but it is not filling up? Correct. So it may be a, yes, leaky bucket or a bucket which has holes in it, right? Similar way, even if we are growing, we are trying to grow, we are selling a lot of our goods and services, but if we are not acknowledging and managing or mitigating the risks, those risks are the like the holes. It will take away all our profits. And in today's world, it's so easy, right? If a cyber criminal tries to hack into your system, a single person sitting in a single computer can wipe away all your wealth, right? If you are not ready for it. So definitely that way, this is most needed for us. Along with growth, risk management is also needed. Okay. Governance and culture, we have discussed this. All of this we have discussed. Parts again they are saying. So some repetition is also there. All right. So you don't, okay, you don't have to memorize all that is written in the book. Okay. But as I said, you need to memorize this table, right? Where is that table? Either this table or in from the book also I showed you, right? Summary was there. So this you will have to memorize, that under which component, which is the principles that are coming up. Not all of this you have to memorize, right? Otherwise you will go mad. correct? But you need to understand things, right, as we are discussing right now. Now we come to a recent topic, right? Why I'm saying recent topic? Because in past few years, this has gained a lot of momentum. ESG, right? Environmental, social, and governance. Hmm? So, what are you doing for the environment? What are you doing for the society? How good your governance policies are, right? Governance means that everything is right or not. What is happening in your company is correct or not. Okay, it is not related to government. All right, it's governance. So, how do we apply ERM to these, right? ESG. In today's world, if we are not looking at these environmental, social, and governance issues, those risks, then we may not be accepted by the shareholders, the new age shareholders, because the new age shareholders care for environment also, care for the society also, and care for the governance also. Of course, the first and foremost thing they care about is appreciation in share price. But then on top of that, if there are two companies, one has both has growth perspectives, right? And one is also taking care of these ESG issues, other one is not. Then what do you think? Whom the shareholders will choose, the first one or the second one? Okay. So I'm saying that the shareholders care about appreciation in share price, right? Shareholders value, correct? But in this case, if you see, I'm saying that even the shareholders will consider these ESG issues also. Let's say two companies are there, both have growth perspectives, right? So shareholder has seen, yeah, both will give us good returns in the future. Now the first company is there which is taking care of these ESG issues also, and the second company is there which is not taking care. Then which company they are going to choose, the first or the second? Correct. That means you guys are not listening to me, right? Because I asked the same question just 2 minutes back. Hmm? Is the class going so boring? I'm trying to explain all the concepts, but what to do? These are a little bit dull topics. There will be topics which will have numericals, and there will be certain topics which will be a little bit dull, right? So it's nothing is perfect, right? So this subject also is not perfect. But anyway, coming back. So ESG issues are generally so what I'm going to do, I will after this topic I'll close the class today a little bit early. Otherwise, I don't want you guys to sleep, right? The way the things are, you guys are responding, I think you guys are already maybe lying on your bed with the laptop. So anyway, so first, what are the issues as we were discussing, right? ESG, the full form itself is environmental, social, and governance. So environmental issues. So environmental issues, very easy to understand, right? We care about pollution, we care about deforestation, and we care about climate change also. Now let me give you an example, right, to make it the class also a little bit interesting, and you guys will wake up also a little bit, because this is a very recent um, news that occurred. For the past many years, all these paintings, right, you know, the art paintings are there, which most of us will not understand why they are so much costly, correct? If you were asked to pay for one of those art paintings, right, Mona Lisa or something, will you pay even 1 lakh rupees for those paintings? That yeah, this painting is there by this artist, so great artist is there, and such a painting, good painting is there. Do you want to buy it for 1 lakh rupees to put it in your in on your wall? Will you buy it? Realistically tell me, right? Of course not, right? I would also not buy it. So now what happens there, right? I will not go too much into the details. Basically what happens, first, it is a very good playground for money laundering. Okay, all the um, all the mafia, all the people who are terrorists, all right, they will try to siphon their monies by buying these paintings. And then of course other people are there who buy, means high net worth individuals, they buy these paintings, they will keep it with them, and then later on when it appreciates in value they will sell it, just like an investment, right? Because they have bought it, someone else will buy it at a higher price at a later point of time. Okay, now coming back to the topic, recently what happened, in case of Mona Lisa or some other painting, some person went and they just tried to destroy that painting by throwing some oil on it or something, right? Why do you think that person did this? Because he was mad. Was that person mad? What do you think? Yes or no? Means what do you think? Was that person mad who threw oil trying to destroy the painting? I will tell you one more thing. That person was a climate change activist. Now you tell me, do you think that person was mad? Yes. So, but till now, are you able to get the link? Any link? No, right? That why a climate change activist will try to destroy a painting, right? An artist, classic masterpiece, if you want to say like that, right? No, right? We don't get any direct correlation between both of them, but there is a correlation. Most of these paintings, right, are managed and preserved, because you have to preserve, right? Otherwise, they will get damaged. Lakhs and crores of rupees are spent on preservation of these paintings. Within, means they will, if you go, you will go mad, right? You will see all those bulletproof glass and so much security, the temperature at certain level, humidity will not be there, dehumidifier, or blah blah blah, right? So all those require money, right? And who are maintaining most of these paintings are oil giants. Okay, let's say Shell. All right, so those oil giants, by oil giants means oil refinery guys, right? All the industries, they are maintaining it. And of course, they are the biggest culprits for climate change, isn't it? Those are the industries uh, which will destroy our water bodies, right? Even not even water bodies only, soils also, correct? Our soil, our water bodies, everything is destroyed by them. So that's why the climate change activists will go and try to um, try to damage the paintings so as to give a message that they don't want these guys to do. And why the those industries are doing it? Because they know already that people don't like them, right? Shareholders also are people like us only, right? So nowadays people are woke. Okay, me and you also, we are not going to try to associate even at a share level also with a company which is not coinciding with our moral values, right? Okay, we will try to find out some other company which is doing something which is moral also, and they are going to make us money also. Both we want, right? Today's shareholder has become much more awakened than the previous generations. Okay, now this is why the oil companies are trying to preserve these paintings, so that they can show they can show that they want to preserve the culture of the country. All right, so the bad image that is there, they are trying to wash away with this good image. Okay, so those things are there, just one example. Okay, so basically pollution, deforestation, climate change, etc. will be there in this ESG. Okay, then social issues are also there, that how they are taking care of the employees, right? So Amazon is harping a lot about that employee safety, employee welfare, etc. Why are they harping about so much about employee safety? You know, because Amazon is one of the worst company in the entire world for employees. Okay, their work culture is very toxic, and by the way I'm saying this, you might have understood, because I have spent around a few months in Amazon. Within a few months I left that company. Okay, so of course it depends on your team also, But on a larger scale, if you go on the internet also and search, to the lower level employees also, right, the delivery associates and everyone, they treat very badly overall at a world level. In fact, one of the news I was reading, that the truck drivers who are delivering, they are on such high targets, they don't even have time to pee, right? They can't stop the truck and go to the washroom, so they carry some water bottles to pee in the bottle. Okay, so you can think about what type of toxic environment that people are working, right? And I'm not only against Amazon, but these are some real issues that today's shareholders are looking at. Okay, I don't want to pick at Amazon, but again, one example came into my mind. So Amazon had changed like 3 years back or 4 years back their logo, 3 years back. All right. So it was like a sellotape which was coming up. They wanted to show that a box is there, their Amazon brown box, and a sellotape, blue sellotape is coming. But that blue sellotape was somehow looking like Hitler's mustache. You can go and search on the internet. Amazon logo change, Hitler, like that you can search. So then such a backlash happened that they went ahead and changed the logo, okay, so that it doesn't look like mustache anymore. So you can think the power of social media in today's day and age. That is why companies are looking at all these issues. It's not that the companies have become woke all of a sudden and they want to benefit the society. They want to benefit themselves. That's why they are trying to have all these in place: customer satisfaction, human rights, right, whistleblower mechanism, etc., etc. Governance issues, obviously, this has been there for a long time, that fraud should not occur. Management is not siphoning money on their own. The board should have good oversight on this. Diversity is a key term today, right? What is meant by diversity, by the way? You hear it a lot, right, in companies. Diversity, promote diversity, promote diversity. What is meant by diversity? Anyone knows? Racial diversity. Okay, good. Different cultures. Good. Different or variety. Okay, different race or religion. Very nice. So you guys have given example about diversity, which what it actually means. But in India, sadly, what it means, diversity means the ratio between male and female. Okay, all over the world there are multiple things. You can go into those LGBTQ community also, those representatives should also be there in the all over the world. But in India, whenever you talk about diversity, what they think is how many women are there in the workforce. Okay, but you guys are right that it should be a mixed bag, right? It should not be that only one ethnicity is being promoted at a company, but it should be multiple. Racial is not relevant. It's, see, Virbal, so you should have a wake up call, right? Racism in India is so much that I would say that maximum racism is in India more than all over the world. But that's just me talking about, right? So many states are there. In each state, you will find that the people are very much localized. Okay, no one is welcoming, right, people from other states. And the policies by the government is also such, because it's vote bank politics, right now also, elections are going to happen, right? You will see so much localized basis politics will be happening. Okay, so don't think that racism is not relevant in India. It's all the more relevant in India. Okay, coming back. So governance issues, yeah, bribery, etc., bribes, etc., should not be promoted, right? So that is also part of governance. Um, so let me ask you one question, right? Um, a US company is there, okay? It is trying to set up its operation in India. And in India, right? Bribes are common or not in India. If you want to set up company here, your branch or subsidiary here, bribes are common or not for getting all the approvals in place? Correct? It is very common, right? So, as per US law, what do you think? The US company can pay bribe in India or not? Because India is not under US law purview, correct? India is not under US law purview. So what do you think? As per US laws, because we are studying US CPA, right? So we care about US laws here. As per US laws, what do you think? Are we allowed to give bribe in a separate country like India or not? Very nice. So it for US it doesn't matter that whether you are giving the bribe in same home country or in any other country. You are a US company. You should be ethical, right? You cannot pay bribes in another country. Okay. Also, there is a specific law, Foreign Corrupt Practices Act. Yeah, exactly, Veerbal. So no, not ethically, Syed. By law, it is not allowed. If they are caught that they have paid bribe in another country also, they will be prosecuted in the US also. Okay, which makes sense, right? Ethics you forget here. For companies, for even individuals, human being also, most of the people are not ethical. Okay, be very clear about that. That if push comes to shove, if there is a personal benefit involved, most people are not ethical. Okay, companies are 100% not ethical. Okay, you will see, right? Even I gave the example of Tata Group right earlier. That Tata Group generally people respect a lot. But if you go and see some Neera Radia case was there 10 years, 11 years back, right? So there have been many cases against Tata Group also. So no one is 100% spot free. Ethics also comes from tone at the top. Even if the founder is an ethical person, it gets diluted as and when shareholdings become more and more public, right? And management based CEO comes into picture, all those things happen, then it will be a different scenario altogether. Okay. Yeah, going ahead. So of course we have to we have to give trainings to the employees, or we have to give set up policies and procedures and distribute it to the employees so that they are aware of the entire culture and entire ESG situation. If they are not aware, if they are not trained on that, how are they supposed to manage it, or how are they supposed to accept it, right? So it will include that we have to understand the business context also, and then set up the strategy and business objectives. Okay. So all these are generic logical based statements. See this module, um, entire module, apart from that memorization of that table that I talked about, apart from that, everything inside that you will find very logical. Okay. If you go through the MCQs and you will see the explanations given in the Becker software, you will see very logical. All of that is. Okay. Sorry. So risks associated, obviously reputational. We again and again talked about reputational. Operational risk can also be there. Credit risk can be there. That in the market, people will not be willing, the vendors may not be willing to do business with us on credit. Okay, because if we are not looking at ESG model, they may think that we may be a fraudulent company. Okay, liquidity risk, etc. Okay. Identification, identification of the risk. So this is very similar to any other risk. We'll have to make an inventory, make a list of all the risks, prioritize the risk. We'll have to use the responses also based on the parts model, right? So this is an example given that a drug company is there, a manufacturer basically, and they are concerned with the compliance and reputational risk with unfair or predatory pricing for the patented formula. I will give you an example. Okay. So what had happened is that there was a cancer medicine, okay, that was manufactured by a particular company. It's a few years back. I don't remember the name of the medicine. Okay, so if you any of you guys remember, you can type in that there was a cancer prevention or cancer management medicine. The company was selling it at a reasonable price, so it was all fine. Then that company got sold out, means a merger or acquisition happened. That company got sold out to another company, and the new company which took over the earlier company, they increased the price like I think 100 times or something. I don't remember actually, but it increased multifold. Okay, there was a huge hue and cry in the market, right? That what the hell they are doing, right? It's a life-saving drug, and they have priced it such higher that now it people may die, right, without having that medicine. Correct? The owner just simply said that this is the value that I see in this product, and I'm going to value at this. So what do you think? Are they thinking about this ESG or not? That new owner is, are they thinking about this ESG? Correct. So definitely they are not thinking about this, which should not be the case, because public has a lot of power. If you recall, um, there was some case of one celebrity, I think Amir Khan, or right. So Amir Khan had said something about India, right, as a country, that they feel unsafe in India. Then people, what they did, they started uninstalling Snapdeal, right? Snapdeal, the brand ambassador was Amir Khan, right? So the public figures, the celebrities also need to be very, very careful what they are doing, right? Because that may have an impact. Recently also, it happened with Amitabh Bachchan. Amitabh Bachchan and Deepika Padukone's husband, Ranveer Singh. Yeah, Ranveer Singh, right? Sorry if I'm not too much into all that, because I used to watch movies a lot earlier, but now it has become a little lesser, so I'm not too much aware. But I know about this situation because it came in the news that Amitabh Bachchan had done that ad, right? Pan masala ad. Okay. Any of you eat pan masala? Don't get offended, okay, by this. So just joking, okay. I know you guys don't eat. So um, so pan masala ad they did. So Amitabh Bachchan is such a public figure, right? Everyone loves him, right? And everyone looks up to him, correct? So such a personality, if they are coming and doing pan masala ad, so that's so bad, right? For money, you are doing everything. You can sell your soul also for money, it seems. So then he said that I did not know that this is pan masala ad. Arey, how you cannot know? Yeah, that is bogus, right? So in fact, even figures like Shah Rukh Khan, Ajay Devgan, Akshay Kumar, right, who is like always harping about fitness, correct? So those guys also did pan masala ad, right? So they had, in fact, apart from Amitabh Bachchan, no one came out even for as an apology, right? So very sad state of affairs, that they are not thinking about their reputation, but the reputation can happen also, because public in today's social media world, it's very powerful. What can go viral, you don't know, right? So this is fine. We have to review and revise on an ongoing basis. We have to communicate. So these are all the same principles which we discussed earlier. Same is being applied on a ESG basis, ESG model basis. Okay. So disclosure of greenhouse gas, etc., etc. So what do you want? You want me to go to the next module today, or it is enough for today till now? Let me check with you guys only. Do you want me to continue into the next module? We have completed one module right now. Do you want me to continue into next module, or do you want me to close the class right now? Tell me something. I'm asking you. This is a vote, right? Up to me. Can we go through GoPro table again? Yeah, we can go through that table again. Anyone else? Anything? It's 2 a.m. here. Birbal. Oh my God. We can continue tomorrow. Okay. Fine, then what I'm going to do is I'm going to, since someone said about the GoPro table, so I'll go through this table once, so that whatever means, it's like a revision also, right? So within maybe 5 minutes, I'll do that. All right. So first is governance and culture, tone at the top, right? Related to our culture, oversight of the board over management, our core values, again tone at the top, capable individuals or employees, whether we are retaining them or not, because we should not let go, right? Today's culture is you let go of the current good employees and take other employees at a higher rate, right? Giving them 50% hike. So that should not be the culture, because that is costlier for the company. Operating structure also, that whether it is centralized or decentralized model, right? Objective and strategy setting. Objective and strategy setting, basically strategy is like our vision, objective is our mission. Then business context is there. Business context means the environment that we are in, the competitors, the economy, seasonality, etc. How much risk we can take, what is our appetite. Then the performance risk related, identify all the risk. Basically your what is that, identify all the risk means risk inventory. Yeah, I was forgetting the word, risk inventory. Then portfolio view, we have to look at the group view, and impact of the risk, we have to analyze the risk severity. Based on that, we have to prioritize the risk responses, the parts model that we discussed. Then we will have to keep on reviewing and revising it. We cannot stagnate at one place, right? Because the risks are ever changing, so our review should be ongoing. Another word that is called monitoring for this. Okay. Then information communication and reporting, right? All the information and communication should be done on a timely manner for everything, right? Each and everything. All right. So let's stop here. Let's connect back tomorrow, and we'll start off with the next module. Okay. Thank you, everyone. Bye bye. Yes, Sayed, go ahead. What doubt you are having? You should have asked earlier only. Okay, yeah. Tell me what doubt you are having. No, there is no written communication in bar. The written communication was in BEC earlier. Okay, so that has been removed. Now it's just simulations, right? So I think 50 MCQs are there and 7 simulations are there in bar. Okay. All right. Thanks.